Hello, ladies and gentlemen. Good morning from this part of the world, and depending on what time zone you're tuning in from, good afternoon and good evening to you all. Welcome to our midweek review of the Forex Morning Mastery as we are going to be preparing ourselves for the second half of the week. And in fact, there's been quite some interesting development in the global markets as we learned this morning that Donald Trump won the US presidential election and he will be the 47th president of the United States. And of course, this has given the US dollar a little bit of boost as market participants tend to begin to lean toward the US dollar as a result of this. Now, today we are going to be looking at how the US dollar market dynamic in conjunction with the outcome of the US election will be influencing the asset we are monitoring for this week. Remember, we are monitoring about three financial instruments, which includes the USOILSPOT, the USDJPY, and of course the XAUUSD, all of which we've done fairly well across them. We are going to be looking at how well they have done and how we will be using the information from the global markets to decide whether we are going to be buying or selling today. So I have some interesting and simple trading setup that we are going to be using to navigate the market today. So I encourage us all to stay tuned in so you don't miss out on the ideas we will be deliberating on today. So, for those of us who are joining for the first time, you're highly welcome. The Forex Morning Mastery is an educational avenue where we come together 3 times in a week. That is Mondays, Wednesdays, and Friday to have a deep insight into how market participants are behaving and of course using that information to strategically position ourselves for the moves for the next move across the asset we are monitoring. So you're highly welcome on board, and once again glad to have you around with us. Feel free to engage in the comment section. You can ask me anything as regards to the financial market. I'm here and willing to be of help in that regard. So with that being said, now we will be diving right into the business, and as usual, the first thing we normally do, our daily routine, is to keep tabs with the fundamental factors that has been and will be influencing the sentiment in the market. Based on the asset we are monitoring, we have been focusing our attention on high impactful events from both the United States and the Japanese economic docket. However, days where we do not have high impactful event, we include mid-tier economic features. And of course, the first trading day of the week, that was November 4th on Monday, we did not have any high impactful events. So instead, we were looking at the factory orders for a clue into how market participant will behave on that particular day. And for those who don't know, the factory order is usually released by the US Bureau, and it gives us an insight into the change in value of new purchase orders of manufactured goods in the United States. And this could also be considered as an inflationary data, as it gives us an insight into the purchasing value from manufactured goods. And of course, the higher the reading, the better it is for the US economy, which obviously will rub off positively on the US dollar, and while a low reading will definitely influence the US dollar negatively. And on that day, we saw the actual data coming in at a deficit of 0.5% contraction, which was a little bit better than the previous month data, but a little bit lower than what market were expecting. So it was more of and it didn't really bring any traction to the market as the US dollar dynamic continued to consolidate in anticipation of the outcome of the US election. Then on Tuesday, November 5, we had a couple of impactful events, both high and mid. We had the presidential election, of course, which happened all day. Then we also saw the ISM reports. We saw the services PMI, which as expected came in higher than market had expected. We saw an actual data of 56 as against market expectations of 53.8, and of course this was way higher than the previous month. Now, for those who don't know, the ISM Service PMI is a report that gives an insight into the health and performance of the service sector in the United States. And it comes within a range between 0 to 100. I've explained this countless of times. When it's above 50, it shows that that sector is expanding, and when the data comes in below 50, it shows that there is a contraction in that sector. And of course, with an expanding, with an actual data of 56, it shows that the sector, the service sector, is expanding. This has been a consistent behavioral pattern for the last 3-4 months, showing resilience in that particular sector. And today, Wednesday, November 6th, we only look, okay, yesterday we also had the Bank of Japan monetary policy minute, which was published later yesterday evening, and market participants definitely were looking forward to this report as it is considered to be a significant it has a significant influence in the market. It provides the market with the central bank, that is the Bank of Japan's details, detailing the economic outlook, the rationale behind monetary policy decisions. Its impact on the sentiment is considered to be significant as well. And we had some interesting insights into that report yesterday, as we saw that the officials of the Bank of Japan intend to plan to gradually raise interest rates, and coupled with the remarks from the Bank of Japan as regards supporting the yen, this could probably give the yen some support, but I doubt we could see any positive traction considering the recent development as regards to the outcome of the US election. But we are going to be looking into the USDJPY in a moment if you are a USDJPY fan. Now, today, November 6th, that is Wednesday, we are looking forward. There are no high impactful events today from both economies. The only one that could probably influence the USDJPY is the labor cash earnings, which shows the average income before tax by regular employee in the Japanese economy. So if this data comes in higher than market had expected, it could bring some positive traction in favor of the Japanese yen, while a low reading could incite a negative traction. So what is the data saying here? Where we look at the previous month, it came in at 3%, as you will see here, and market participants, economists are projecting a 2.8%. So from what is on ground, if they are projecting 2.8%, it shows that that sector is not really didn't really do as well as the previous month, but that's a projection anyway, but we'll still look forward to see what the actual data will be. And since we have a theoretical understanding of its implication, if the data comes in higher than market had expected or even higher than the previous month, we could see some positive traction for the Japanese yen. And if the data comes in below market had expected, we could see a negative traction. So that is what we are looking forward to today, Wednesday, November 6th. And besides that, do we have any major event coming up tomorrow that we could also take into consideration while we review the current market structure? Because even though we don't have this event today, tomorrow's event can definitely influence how market participants will behave today. Now, for tomorrow, Thursday, November 7th, we have a bunch of impactful events from the United States. Well, one of them, though it's a mid-tier economic feature, is the initial jobless claim for the month of October. So this is a labor-oriented data released by the US Department of Labor, and it measures the number of people filing first-time claims for state unemployment insurances. Now, if this data comes in higher than market had expected, it will indicate weakness in the US labor market, and that's of course a negative influence on the US economy, and it could bring in a contraction for the US dollar. But if it comes in lower than market had expected, this will be a positive signal. So initial jobless claims tells us how much people are filing for unemployment benefits in the United States. So we look forward to see what that one will be. Market are expecting something higher than the previous month of 221,000. So we look forward to see what the actual data will be. And I strongly believe that the anticipation of this event definitely will influence some decision making in the market, as major key players may want to step aside waiting for the outcome of this report before making any aggressive bet around the US dollar market dynamic. Then another impactful event that we are looking forward to tomorrow is the interest rate decision from the Federal Reserve. So tomorrow we are going to be looking forward to some interest rate decision. But this is the outcome. It gives us an outcome into the Federal Reserve meeting where they decide whether to change or maintain the current interest rate. So this decision has a significant impact on the market for those of you who have been following me for a while now, as it reflects the Fed's assessment of economic conditions, and any changes can influence borrowing costs, investment, and overall economic activity. So, well, from all ramifications and from what the majority in the market are thinking, they are leaning towards a 25 basis point cut. In fact, I looked at the CME FedWatch tool yesterday evening, and there is about over 80% favoring a 25 basis point cut. So we look forward to see what the actual rate cut is going to be. So the previous month it was at 5%. So we are looking forward to a 25 basis point cut. So that's going to bring it down to 4.75%. So we look forward to see what that will be. And what is the implication of this? Well, if there is a 25 basis point cut, it could devalue the US dollar a little bit, as major key players, investors may want to start bringing out their funds from the dollar due to the reduced return on investment on that particular asset. Then on that same day, we are going to be looking forward to the monetary policy reports. Like I did say earlier, for the Japanese economy, it provides us with the central bank's detailing of the economic outlook and the rationale behind the monetary policy decision. And then 30 minutes later, we will be listening to the Fed chairman during the FOMC press conference, where he will be communicating the Fed's monetary policy decisions, economic outlook, and answer questions from the media. So investors will closely analyze what the Fed chair is going to say, as it will give an insight into future interest rate changes and overall economic conditions. So these are very important events coming up tomorrow, and due to these expectations, we may likely see extended sideways trading activity today. I think the volatility falling out from the result of the US election may have come to a halt at the moment, and we could see some extended sideways trading activity, reflecting the indecisions among major key players in the market. So we should not be surprised about that, and we're of course going to take this into account while we analyze the market together today. So with all of this being said, let's dive right into the chart and let's see what is going on in the market and what will be our plans for today. Well, as always, the first asset we are going to be taking on this morning is going to be the US All Sport as always. And of course, on the US All Sport, we've had some quite interesting situation go on since the beginning of the week. Remember, the week started on a strong bullish note, and we were privileged enough to be part of that uptrend scenario after we consider the character of price action at the beginning of the week. So I will only be deliberating on the 1 hour time frame. We already done a top-down analysis on this asset on Monday. And of course, from our top-down analysis, we were able to bring out some two important structures here. One of which is this ascending trend line that you'll see here. This trend line here has been supporting the bullish momentum since last week Tuesday. As you will see here, price had consistently respected it, pushing price to the upside. Then we also had our key level at the $69 area, just right here. And of course, you know, when price remains above our week's key level, we continue to look out for patterns and structures that supports the idea of buying. Now, at the beginning of the week, we saw something interesting happen in this particular market. So you can see here, the market started this week around the $69.45 area, just exactly at the touch of that ascending trend line where price closed last week Friday, and we saw this beautiful engulfing bullish candle bringing price into the $70.80 area. So for this week, for the beginning of the week, we had the simple structure. We had the resistance line, had the $70.80 level. We also had our support at the $69.45 area, giving us a range bound structure to work with ahead of the week. Then I think I mentioned here on Monday that I already had a buy position triggered. As you saw here, we had a buy position triggered at the breakout of the resistance line, and I did mention that if you had missed out on that opportunity, we have two choices to continue that uptrend move. One is wait for price to break out and retest the $71.40 level to join. That is if you missed out on that first entry, and for those who capitalize on that first entry, it will be an opportunity to add more buy positions. And of course, we saw price move about 40 pips thereabouts in our favor before that bearish momentum came in. I hope you moved your stop losses accordingly. If you had moved it, the worst case scenario on that one will be at break even. And of course, we saw price come back again to retest that structure we talked about earlier. So if we were the patient one and waited for this retest, it will have been a splendid opportunity to continue that uptrend move, as we saw price move over 180 pips. The bearish momentum began later yesterday during the Asian session, and I think this was an immediate reaction to the what's it called again, the API reports from the United States showing a rise in crude oil stockpile by 3.132 million barrels for last week, which was well and way above market expectation. And of course, you know what this means. It signals potential oversupply concerns, putting pressure on oil prices. And I think that was the reason why we saw that massive downturn, pushing price back into that ascending trend line. Congratulations to everyone who was part of this profitable journey, and as we had all our buy positions closed with at least some profit. So in preparation for today's trading session, what is going to be our plans? Do we still have the potential of an uptrend intact, or are there chances that sellers could come in anytime soon? Well, if we look at this, I still think that at this juncture, based on the outcome of the US election, the rally in the US dollar boosted by the Trump trade speculation makes oil more expensive for foreign buyers, and this could weigh in on the demand for crude oil at this point. And um, we saw a little bit of uncertainty in the last 4 hours as the presidential race in the US caused some uncertainty. It was a very tight race leading to this morning, and it allowed a cautious market sentiment putting pressure on the US oil, and this resulted in this little bit of consolidation as we saw this last for about 4 5 hours before this oil move happened. Now, so for me, I still think that it is still looking very dicey at the moment. We have the APR report showing that there is increased crude oil stockpile, which is a negative signal for the crude oil. You know, our simple economics tells us that when there is high supply, what happens? Price is definitely going to drop. But besides this, we still have some positive features that we can bank on to buy the US oil spot, like the OPEC Plus proposing to extend their production cut of 2.2 million barrels per day through the month of December. I talked about this on Monday, and this could support oil prices by limiting supply as well. And you know the reason why this is happening. They said that there has been increased supply amongst oil producing countries, which is outside the OPEC, and they are trying to stabilize the market by cutting costs from their own end so that the supply from other oil producing countries will not be able to meet up with the demand in the global market, and as a result this could cause scarcity, and when there is scarcity, price could rise. That is the plan for OPEC. And another positive thing about this intention is that most of the countries among OPEC Plus showed some commitment to achieving full conformity with production target, and this could compensate overproduction signal that was proposed for 2025. So for me, it's a balanced situation right now, and we need to really see how market participants are digesting this contrasting view before we can jump into any positions. Now, from a technical standpoint, if we look at this, like I did say earlier, price is consolidating in the last 4 to 5 hours, price ranging within the $71.29 level and the $70.20 area, emphasizing the uncertainty going on at this point. Though we had a little breakout of that ascending trend line here. And with this breakout here, my question here is, will this turn out to be price coming back to retest the trend line in an attempt to continue a downtrend move? Or will this turn out to be a false breakdown where the emergence of a reversal setup, maybe in the form of a double bottom structure, could be the trigger that will welcome more buying opportunities? So you can see we are at a crucial juncture right now where, depending on how the market reacts to this confluence, will determine if we are going to be buying or selling. Now, with that being said here, how do we position ourselves for the next move? Now, to do this, we've acknowledged the fact that we are around an ascending trend line, and we are weighing the options of it turning out to be a false breakdown or a true breakdown. So for us to have a deeper insight into this, we will scale down into the 15 minutes time frame, a much more lower time frame, to have a deep understanding into the behavioral patterns of market participants. Now, at this point, remember, this is the resistant line at the beginning of the week. Let me go back to the 1 hour time frame so that this reflects on the lower time frame. So here we have it here. So I'll bring it down to the 15 minutes. So let's look at it together on the 15 minutes. Price is back at that resistance line, which was broken. Remember, the $70.80 area was that platform that we used to join that first buy position at the beginning of the week. Now, will it turn out to be the demand again that will trigger buy positions for the second half of the week? Well, a lot of patience will be required around this particular area. So within this area, you can see within the last 1 hour 15 minutes, price has been oscillating around this area. So we have a range bound structure there to work with. So we have a resistant line here at the $70.95 level. So I do want to mark that area out. So we have the $70.95 level. Hold on a second. Let's keep this intact. So I'll give this a green color so that it will differentiate it from the other one. So we said $70.95 level, $70.95 level. That's our resistant line within that range bound structure. So I'll give this also a coffee brown color. So here we have it. Now we also have the support line of that range bound structure right here around the what is that again? That around the $70.65 level. So let's mark that one out. So we have a little bit of consolidation phase going on within this particular area. Now, how do we navigate this? Of course, if you have been with me for a while, you know how we use our range bound structure. We exercise patience, waiting for the market to go through their negotiation. It could take a while before we finally conclude on whose way is going to be favored. Is it going to be the buyers or is it going to be sellers? But one thing we look out for as technical traders is price either breaking down the support line to give us an opportunity to sell, or price breaking out of the resistant line to give us an opportunity to buy. So that is how we are going to be positioning ourselves for the next move around this particular area. Now, with that being said here, we need to take into account some other factors behind the, within this structure as well. Remember, we talked about a potential double bottom structure on the 1 hour time frame, citing this downtrend move, price coming back into this demand zone area to incite some reversal setup. So because of this expectation, we need to be very mindful. So if we sell, that is if price breaks down, retests the $70.65 level and it drops to the downside, please let's ensure that we are around to secure positions as soon as price moves significantly in our favor. Now, how far should price move before we move stop losses? Maybe about 25 pips thereabout. Once it moves, you move your stop loss to break even, that is to entry point here. Secure the position while we wait and see if price will go ahead to break down the lowest point for this week, which is at the $70.20 level. So if price goes ahead to break down, retest that structure, we do definitely want to be adding another sell, right? So that is how we are going to be joining that bearish move there. So please let's ensure, remember, we are within a demand zone and it's looking more promising that buyers could take over the market from here. So if it happens that we sell, please move your stop losses as soon as price moves significantly well. Now, considering the fact that this area we talked about remains a demand zone, remember this was that area we looked out for buying opportunities at the beginning of the week. This could further become a platform for the uptrend continuation. So placing a buy stop order above the $70.95 level seems promising at this point in time, and then having your stop loss way below the previous structure, that's about 32 to 35 pips of stop loss we are talking about there. So let's see if that is going to be the case, and if it does be the case that price action breaks out, retest the $70.95 level, this will give us a platform to continue the uptrend move. And then remember, we have the neckline of that double bottom structure we talked about earlier at the $71.25 level. So we have the $71.25 level here, which will help us to maximize the uptrend if price action ever breaks out of that structure. So you can see we are at a crucial juncture where, depending on how the market reacts to this confluence here, which has been in existence for the last 1 hour 20 minutes. So let's wait and see how the market is going to be reacting to the structure. So that is how we are navigating today's market. The fundamentals are not really giving us a straightforward answer, so we just have to rely on the behavioral patterns of market participants, which will reflect how they are digesting the contrasting views we talked about earlier. So this is my simple view on the US All Sport for today. If you have any questions or you need some further clarifications, feel free to let me know in the comment section. So I will be taking the next 10-15 seconds off. Let's see if there are any questions whatsoever before we move on to the next asset on our watch list. Stay tuned in. And don't forget to give the video a thumbs up, please. Thank you very much. All right. So I see you, Jonah Aruna. Good morning to you. I see you, Torres Master. Good morning to you too. Glad to have you guys around with us this morning. So in the absence of no questions, I do assume that we are all on the same page. All structures have been duly replicated on our charts. So let's exercise patience at this juncture and let's wait to see how the market will react to this area. So will it break out the $70.95 level, or will it break down the $70.65 level? Well, time will tell. So I wish us best of luck on that one. So let's move on to the next asset on our watch list. Stay tuned in. So the next asset we will be looking at today is the USDJPY, that is the US dollar against the Japanese yen. We started trading these last week, remember, and of course we did very well last week. And this week we've had a little bit of choppy market condition, which resulted in a loss for us yesterday, and I guess this was due to the uncertainty prior to the US election. Let's run through, let's see what has really happened in the market and how we navigated this market in the last couple of days. Now, at the beginning of the week, we saw how the US dollar dropped significantly to the downside, which was of course peppered by the intention that the Bank of Japan may likely intervene anytime soon, and of course this resulted in this strong bearish move to the downside. So we had the resistant line for the week at the 153.00 area just right here, and then we had the support line for the week at the 151.600 area. Now, for those of us who are part of our Monday session where we did a top-down analysis on this asset, on the 4 hours time frame, we were able to mark out our key level at that psychological zone at the 152.00 area, which of course served as both resistance and support line in the last couple of months. Now, you know how we use our key levels, of course. When price remains above the key level, we buy, and if price drops below the key level, we look out for selling ideas. Now, with the situation we had at the beginning of the week, price before the session, I told us I had a buy position triggered, and during the session, price was just right below that key level, just right here. And I did mention that for those of us who missed out, we can still place a buy stop order above that key level at the 152.00 area, and of course have our stop losses way below the support line here at the 151.6. Now we saw price after about 2 days of trading, we saw price take us out of that position in a loss yesterday, as we saw price drop below the stop loss area here, taking us out of all the buy position in a loss of about 50 pips thereabout. And immediately that happened for me yesterday, you know how we use our key levels. Of course, we replaced my buy stop order above the 152.00 area, and look at what happened following the this happened during the Asian session, of course. And this morning when I woke up to check the chart, I saw that I had two buy position triggered, one at the 152 and the other at the 153, as we had projected during our live session on Monday. And for those of us who capitalize on that opportunity, well done, kudos to you. As you will currently, if you had only one buy position from there, you'll currently be having 190 pips in profit, while if you take advantage of the second one, you should be having another 100 pips in profit. So approximately with 300 pips, we have not done bad at all, though we started on a negative note. We had price take us out, but we were able to recoup the losses we incurred, and of course made some profit on top of it. So at this point in time, it is high time we want to be moving our stop losses accordingly, securing some profit. As you can see, the last 1, 2, 3, 4, 5, 6, 7 hours has shown that there is an indecision in the market right now. So for me, the most appropriate area to move all stop losses will be around the 153.500 area, giving enough breathing space for price action to move around. So once again, congrats to everyone. And with a well secured position at this juncture, what is going to be our plan next? Well, we need to also understand what the market participants are thinking. Well, we have the Bank of Japan policy, which the monetary report that was published yesterday, which shows that the Bank of Japan still has a plan to gradually raise interest rate, and coupled with the hawkish remark from Bank of Japan governor, may likely provide some support for the Japanese yen. So this possibility here is something we cannot ignore, as we could see the yen gain some traction today. And of course, if this whole consolidation phase evolves into a reversal pattern, we may likely take advantage of that bearish move. It could be a short-term one. Remember, we have a couple of descending trend lines here. Let me show you. It's a technical structure here. So we had this couple of descending trend line, which was broken during the early hours of today. Remember, we had the breakout of the first one. We had the breakout of the second one here. And from a technical standpoint, we could see price evolve back into structure, maybe to continue the uptrend move, or even break it down to continue the downtrend scenario. So the yen still has a potential based on the report we saw yesterday, so we cannot ignore selling potential around this area. And of course, there is also a cautious optimism regarding domestic inflation in Japan, and the possibility of further rate hike lends a modest lift to the yen. And I still, with this one too as well, I still think that the yen could still gain some traction. So let's keep that in mind. Now, despite the fact that we are giving the yen some hope at this point, we cannot ignore the outcome of the US presidential election, which across board has favored a surge in the US dollar. And this, of course, was one of the major reasons we saw this bullish engulfing candles bringing price into that particular area. Now, will this momentum be sustained? Well, there is a spike in the US Treasury bond yield as well due to inflationary concerns, the US election, and of course the potential of deficit spending speculations after the election. And this, for me, continues to support the US dollar and drives flows away from the yen. Now, another factor that could influence the yen negatively is the uncertainty over the Japan's political landscape. In fact, presently there is growing doubt over the Bank of Japan's ability to tighten monetary policy further due to domestic political uncertainty. I just told us last week that the major party in the parliament lost the election last week, which is not a very good signal for the Japanese yen at this point in time. Now, with this information here, the path of least resistance look to the upside at this point, if you will ask me, but we cannot ignore the positive drivers from the Japanese economy as well. But the character of market participants at this juncture will reveal to us what is likely going to happen. And for me to understand this uncertainty in this market here, I will need to scale down into a much more lower time frame. Let's see if we can identify a structural pattern that will give us an idea into what the market participants are likely going to be doing today. Now, for me to do this, I would like to have a new chart altogether, and let's look at things from a fresh new perspective on the 15 minutes time frame. So let's go right down to the 15 minutes time frame. So this is the 1 hour. Okay, so let's go to the 15 minutes time frame. So here we are on the 15 minutes time frame. Now, this is the old consolidation phase we were seeing on the 1 hour time frame. Now, if we take a closer look at this, what does it tell us? Well, first of all, I want to acknowledge the fact that we have an uptrend scenario. If we connect all the pivot lows, you can see we have a bullish, an ascending trend line. I want to thicken this a little bit to emphasize its importance. So let's thicken the color. So we have an ascending trend line in place. So let's do some little adjustments so that it can capture all the pivot lows, as you will see. So we have an ascending trend line in place. Then we also have a resistant line, right? We have a resistant line. And what do you think this pattern is forming? Hold on a second. It's getting interesting here. So we have a resistant line at the 154.250 level, right? So we have a 154.250 level. And from a theoretical perspective, what structural pattern do you think this is forming here? So if we look at it, let me give you a visual representation here to make things much easier. So you can see we have an uptrend scenario. That's the bullish, the impulsive leg. Then we have a formation of pattern. Price appears to be going through a consolidation, which is contracting, and at a particular point it's going to explode either to the upside or to the downside. So at this point we have the simple situation, which from a theoretical standpoint, this is looking like a uptrend continuation pattern in the form of an ascending triangle. And when we have this kind of uptrend continuation pattern, where are we looking out for buying opportunities? Of course, we want to see price break out the 154.250 area. So if price can break out of the structure, we're good to go, continuing that uptrend scenario. And if we have this kind of uptrend, where will our stop losses be? Of course, we do want to be having enough breathing space. So let's have it right below the structure, maybe around the 153.750 or 153.800. So we are looking between 45 to 50 pips of stop loss from that bullish expectation right there. So we are looking at buying the breakout of the 154.250. Now, let me explain the psychology behind this technical structure. We have price knocking the ceiling. Can you see when it knocks the ceiling here, we see selling pressure push price to the downside, and look at the distance of that selling pressure here compared to when it knocked it the second time, the selling pressure appeared to have reduced. And look at this one, we're still looking at this. It appears to be reducing at every point in time it drops from that resistance line. And you all know when we start knocking the selling over and over and over and over again, at some point in time, we'll see the selling take in and then push price to the upside. And it's not all the time these technical expectations come into play. Sometimes we may see attempts by major key players in the market to take out a lot of people from the market, and you see something like a false breakdown here before it moves in that direction. So we need to take that into account as well. So that is how we are looking at buying the USDJPY today. Now, in as much as we're looking out for buying opportunities at this point, you know how we do it in this community. We try to be as open as possible. So we take into account the potential the buyers have. We also take into account the potential the sellers also have. Now, we talked about a couple of major drivers for the yen. We talked about the Bank of Japan's plan to gradually increase interest rate during the next couple of months. We also talked about the hawkish remark from the Bank of Japan's governor, who insinuated the bank might provide some support to the yen. Now, this could incite some selling pressure here, and in fact, we can see that the whole narrative here is causing some uncertainty around this area, giving us that consolidation phase we are seeing. So if it so happens that the market caves into the positive drivers from the yen, how do we intend to join a sell from this particular area? Well, for me to join a sell here, we have a support line at the 153.750 level. So we have a support line right here. So 153.750 level, just right here. And then we want to see price break down the structure for us to consider selling, and not just break down the structure. We want to look out for confirmations before jumping into that sell. So what we are going to look out for is, first of all, price breaks down the support line. Remember, we are not getting carried away. This is just a signal, and it's not a sign that we enter that trade at that point. So we want to see price come back, retest the structure. It could be a retest of the 153.750, or it could even go as far as retesting the ascending trend line. So we want to continue to see selling pressure below the trend line, and that would give us a confirmation to take on a sell. Well, for me, this sell here may likely be a short-term trading opportunity, because I still strongly believe that the path of least resistance for the USDJPY is to the upside. So I will consider this to be a short-term sell, and TP target could be at the previous support of that trend. So we are looking at maybe around 230 pips, maybe around the support line. Let me mark it out. So TP target could be around the 151.500 if we are taking a sell from this particular area. So let me label it 151.500. So we can use two things to navigate this area. So we have the 151.500, and if you remember what we saw on the 1 hour time frame, let me show us quickly. 1 hour time frame, where is that again? So we had the structure here. Remember, we talked about this descending trend lines. So if it so happens that we have price fall to the downside, we may likely see price drop into any of this descending trend lines where our TP target is going to be. So we was talking about the 151. Is it 151 I was talking about on the lower time frame? So in short, we are looking at price maybe coming down into either of those trend line, where the appearance of a reversal setup will incite the second leg of that bullish momentum. So I hope I make a lot of sense here, and I encourage us all to mark out the structure, as we are going to be using it as a reference point to help us navigate the market today. So it's a simple setup we have here. We have an uptrend continuation pattern in place, but we are also taking into account that sellers may also come into play, and if we are selling, we are only going to be looking forward to the breakdown retest of the 153.750. So this is my simple view on the USDJPY for today. Very simple setup. Let's see how the market is going to play out, and in fact, if there is any new development along the way, I will definitely update us on my TradingView and Telegram platform. So if you have any questions, feel free to let me know in the comment section. So I will take some 5, 10, 15 seconds off, and we'll be back again to see and to continue the session. Thank you. All right. So in the absence of no questions, I want to take that as a confirmation that we are all on the same page together. So let's see how the market will play out. I strongly believe that the USDJPY will continue to the upside due to the outcome of the US election, most importantly. And of course, the interest rate decision coming up later today may further supports the uptrend scenario, because the market had already priced in the 25 basis point cut. I just hope there will be no surprises during the interest rate announcement later today. If there are, it could change the dynamic a little bit, but if it comes out as market had expected, we could see the dollar continue its uptrend. So I wish us all the best of luck on this one. So with that said, let's move on to the final asset on our watch list for today. Stay tuned in. So the final asset on our watch list is my favorite, of course, and that is the XAUUSD, popularly known as the gold spot. And what an interesting and complicated situation we had this week. And of course, we know why that is. The anticipation of the outcome of the US election brought in a lot of indecision into the market. In fact, those that were not even normal traders of gold came into the market, influenced the dynamic significantly along the way, giving us a choppy market condition. In fact, I had a couple of losses on the XAUUSD as a result to this latest development in the market. Now, before we go into the details, let's talk about how the market had played out since the beginning of the week. Now, remember, we had this range bound structure. Remember, we had this old structure where price was consolidating within the 2,744 and the 2,732 since the beginning of the week. And I had a buy. Remember, we talked about buying at the breakout of this 2,740, remember, and then we also added one more here, but somewhere we had a couple of losses after this old choppy situation here. Price dropped back down in a loss. Again, I bought again, it moved up. The first one went into a loss, the second one went into break even before the market went into a consolidation phase again. And during my commentary yesterday, I did update us that I will be looking out for a reversal setup around the 2,732 to continue the uptrend move, which actually happened. As you will see, we saw buy pressure resume from this particular area, triggering some bullish expectations here. And before the end of yesterday's trading session, I got taken out with a modest size of profit on the XAUUSD. But why was I able to recoup the loss I made? I think it was at just a little bit of loss I think I had on the XAUUSD. So I had to close all positions, and in fact the uncertainty surrounding the US election didn't make me place any stop order, only to wake up this morning to see the strong bearish momentum to the downside, taking all the bullish structures we marked out on during Monday's trading session. So you can see, did anyone take advantage of this one? I did not take it. I missed out on this one because I never foresaw this to happen this way. But if you are taking advantage of that opportunity, well done and kudos to you. Well, at this moment, looking at the fundamentals and looking at what is driving the market sentiment behind the scenes, I strongly think that the US dollar is about to take some advantage of the gold at this point. We have the US presidential election impact. Donald Trump won the US presidential race, boosting the US dollar along the way and prompting aggressive selling pressure on gold prices. Then we also saw the concerns of over deficit spending, which Donald Trump might blink into play, and expectations of less aggressive easing by the Fed continue to push and favor the US Treasury bond yields higher, reducing the appeal for non-yielding assets like gold. And you know how the US Treasury bond is directly proportional in value to the US dollar. So if the US Treasury bond yield is doing well, it is expected that the US dollar will also do the same. Then there is also the thing about the equity market. Of course, the equity market is doing some positive rally in the moment as this indicates a risk on sentiment, which further drive gold prices lower. So with this old market shift, market participants are now shifting towards riskier assets, and this could cap the demand for gold as a safe haven asset. So for me, the path of least resistance at this point, looking at all of this driver, is looking as if gold is about to witness some profit-taking activity anytime soon, pushing price down to the downside. That's tautology, right? So we may see price drop significantly because I can't find any positive driver for gold based on these market drivers we are seeing. Well, the only one I can see is, well, let's talk about the Middle East tension, the uncertainty in the Middle East tension, and in fact, the concerns over Iran's potential retaliatory action against Israel did not significantly impact the selling pressure on gold. So that's the only factor I can consider to be an edge for gold, which is not really driving it at this point. So in preparation for today's trading session, I do have a new trading setup I'm very excited to share with you guys, and this is it right here on the 1 hour time frame. So this is what I was able to come up with this morning after looking at the charts, and I'm beginning to see a descending channel in play. You can see if we connect the series of lower highs, you can see we have the resistance line of the descending channel, and when we connect the series of lower lows, we have the support line of that descending channel, giving us a beautiful channel to work with today. Now, as long as price remains within that descending channel, we shall continue to look out for selling opportunity. Now, within this descending channel, you can see we have a demand zone, an area which has been supporting buy pressure since the beginning of this month. Now you can see whenever price comes into this area, we see our buyers take over the market, pushing price to the upside. But as you will see, every time price comes back, the momentum gradually reduced. It wasn't as powerful as the first one. Look at it, it reduced here, and then it's increased a little bit, then it reduced again, then finally we saw price break down that demand zone, taking out all the buy positions within the 2024 and the 2735 area to signal that sellers may likely take over the market anytime soon. Now, with the situation we have here and following the outcome of the US election, we are at a crucial juncture here where you can see price action has broken down the demand zone, and from a theoretical standpoint, we expect that price will come back, retest the structure, and continue the downtrend move. And look at what has been going on in the last 3 hours. You can see price had continued to find selling pressure around that area, and it appears that price wants to continue a downtrend scenario. So are we keen to join that downtrend? Well, I think I am. I already have a sell position triggered around this area, so I'm hoping the price will continue to the downside, and I'm looking at a minimum of, let's say, about 200 250 pips thereabout. That is if this support line of the descending channel is respected. So anywhere around the 2,690 and 2,670 is where the TP target on this one is going to be. So selling the XAUUSD at this point and considering the fundamental factors is looking very promising at this point. Now, in as much as the path of least resistance for XAUUSD is looking bearish today, what are the chances that buyers will come in? Of course, we want to take into account the potentials that buyers can also come into play. And if they do, what areas are we going to be looking out for buying opportunity? Well, if you would ask me, I would want to see price climb back above that demand zone for me to start considering buying at this point in time. But if it doesn't happen, I will hold on to any bullish expectations. Well, maybe after the interest rate announcement today, we could see some positive traction. I never can tell. But for now, the path of least resistance remains bearish. And remember that price action has been hitting all-time record in the last couple of months, and we are within uncharted territory. And at this point, and following the US election, we may begin to see the FOMO psychology come into play, as those who had capitalized on the uptrend may want to start taking some profit now, and this could lead to price dropping further to the downside. So as long as price still remains below that demand zone, I maintain a bearish bias at this point in time. So this is my simple view on the XAUUSD for today. I do hope I made myself very clear. If you have any questions whatsoever, feel free to let me know in the comment section. So I will be taking the next 5-10 seconds off. Let's see if there are any questions before we start rounding off on today's Forex Morning Mastery. So in the absence of no questions, I want to assume that we are all on the same page. So we, like I did say, I'm maintaining a bearish bias on the XAUUSD at the moment. And let's see how the market will play out. But trust me, I will be with you in the comment section of both my trading view and Telegram platform to give us update if anything new comes up prior to the release of the interest rate decision later today. So today we were able to take on the 3 financial instruments we are monitoring for this week, which includes the XAUUSD, the USDJPY, and of course the USOILSPOT, where we were able to identify simple trading setups to navigate the market dynamic today. So I hope you all marked out these levels accordingly on your chart, as we will be needing them as a reference point to guide our independent trading decisions today. And for those who joined us for the first time, I hope you are able to gain a couple of things from what we have said today. If you did, you want to be part of our subsequent editions. Trust me, the more time you spend with us, the better you get to comprehend my analytical approach, which eventually could help you in when you make your independent trading decisions. So I look forward to seeing more of you same time on Friday, 9:30 a.m. West African time, 8:30 a.m. UTC, as we come here again to review how well these assets have done and of course prepare for the final trading day of the week. So it's on this note I would like to wish us all the best of luck today. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye bye.